Understanding other post-employment benefits, OPEB. Other post-employment benefits, OPEB, refer to additional benefits retirees may receive from their employers, separate from traditional pension distributions. These benefits can significantly impact a retiree's financial health and overall quality of life in retirement. They commonly encompass health insurance, life insurance, deferred compensation, and in some cases, additional perks that contribute to a comfortable retirement. Key takeaways. OPEBs provide important financial support to retirees, apart from pension payouts. Common types of OPEBs include health coverage, life insurance, and deferred compensation plans. Unless specified in plan documents, OPEBs are not guaranteed and can be changed or discontinued by employers. Types of other post-employment benefits. The primary categories under OPEB can include 1. Health insurance. Retired employees may retain health insurance coverage through their previous employer. This can take the form of a group health insurance plan, which may mirror the plan provided to active employees or exist as a separate coverage for retirees. Medicare considerations. For retirees aged 65 or older, health insurance coverage may be secondary to Medicare. This means Medicare pays out claims first, and the employer's health plan covers remaining costs as specified in the Summary Plan Description, SPD. Plan variability. The specific benefits and out-of-pocket costs associated with retiree health insurance can vary based on the employer and the type of plan offered. 2. Life insurance. Employers may offer life insurance to retirees, which is usually structured as a term life insurance policy. Policy duration. Often, life insurance coverage ends when an employee leaves their job or retires, although some plans may allow for the option to convert to an individual policy at a rate determined by the life insurance provider. 3. Deferred compensation. Deferred compensation plans allow employees to defer a portion of their salary until a predetermined future date, often coinciding with retirement. Types of deferred compensation. These can be classified into qualified plans, governed by ERISA. These plans are structured in a way that they provide tax benefits. Non-qualified plans. These plans do not have the same regulatory constraints and offer more flexibility but fewer protections. This benefits tactic is often employed to incentivize retention of key personnel within organizations by providing financial rewards at the time of retirement. 4. Additional benefits. Some employers may offer other post-employment benefits, including dental and vision care, legal services, tuition reimbursement for continuing education or professional development, wellness programs that assist in maintaining health post-retirement. Which businesses offer OPEB? OPEB can be provided by a range of employers, including private sector companies, which may include large corporations with significant resources, state, county, and municipal governments, often mandated by union agreements, religious and educational institutions, which might offer unique plans specific to their mission. While these benefits are predominantly employer-paid, retirees might still face costs through copayments, deductibles, or prior contributions made during their employment. Tax implications for OPEB. The tax treatment of OPEB can vary based on the nature of the benefit. Health insurance, generally not subject to income tax. Life insurance, premiums paid by employers may be taxable if the coverage exceeds $50,000. Deferred compensation, the income is typically taxed in the year received, depending on the plan formation, qualified versus non-qualified. All participants eligible for retiree health benefits should consider enrolling in Medicare Part A and B once they reach 65 to maximize their health coverage. Are other post-employment benefits guaranteed? A crucial point for retirees is that OPEB is not guaranteed unless explicitly stated in written documentation. Employers retain the right to alter or discontinue these benefits based on plan documents. Therefore, it's crucial for retirees to review their SPD. If the SPD specifies that the employer reserves the right to change terms, retirees could face a loss in benefits. Conversely, if benefits are promised without reservation of rights, then retirees may regain some assurance of continued coverage. Implications for employers. OPEB can represent a significant financial commitment for employers. Managing and administering these benefits can be challenging, especially given the regulatory compliance required, including extensive reporting as outlined by the Financial Accounting Standards Board. Organizations may seek guidance from entities like the American Society of Pension Professionals and Actuaries, ASPPA, to navigate the complexities associated with reporting and delivering these essential benefits. Conclusion. Understanding other post-employment benefits is crucial for employees planning for retirement. It can inform essential decisions regarding financial strategies and healthcare planning. Engaging with a qualified financial advisor to review available benefits and their implications can significantly enhance retirement readiness and well-being. Whether considering health insurance, life insurance, or deferred compensation, a comprehensive understanding of OPEB is vital for a secure retirement experience.